Michael, these seem to be challenging statistics. Give us
Well, they're what you'd call in line. It looks like economists did a pretty good job of forecasting CPI as the month-over-month change for both the headline and the core comes in exactly as forecast at 0.4%. Now, that's up on a headline basis over what we saw last month, which was a 0.1% increase. We're looking for any kind of revision to that. On a month-over-month, year-over-year basis, rather, 4.9% for the headline, which is a little bit below the 5% that was expected and 5% we saw last month. 5.5% as expected for the core year over year, and real average weekly earnings and average hourly earnings both negative, down 1.1% for weekly and 0.5% for hourly. No surprise there, Tom. You mentioned right before we went on that we'd see negative wage growth, and we're still seeing that.
Well, here's the question that I have. Was the whisper number just basically a much hotter inflation read? Was this basically taking the tail risk of a reaccelerating inflation, taking that off the table? Is that the sort of relief trade that we're seeing in two-year yields in particular? Or is there something in some of the subcomponents that's getting people's attention, the super core, that's getting people's attention?
Yeah, I don't mean to interrupt, but I'm looking over at McKee. He's got the secret sauce here, the mythical secret sauce. At least it's like 20 lines of data. What are you looking at there, Michael?
Well, here's what moved during the month. No surprise, energy was up quite a bit by, let's see, for gasoline, 3% during the month. So that is a significant increase, but that goes into the headline, less concerned for the Fed. Natural gas, significant decline there, down 4.9%. People have been looking at that as something of an energy relief. And then the cars, used cars up 4.4%. They were down 0.9 last month, and they had been down for about 6 months before that. So 9 months, I think, is the total. So anyway, a big rebound in used cars helping push things up, and apparel up 0.3 on the month. Medical care commodities up 0.5%. So a lot of these were forecast by economists going into this, and it looks like CPI is coming in pretty much as expected. And it's important to note that the Fed has always said they would expect a volatile process of inflation coming down, that it wouldn't be linear.
Yeah.
And we would see bounces, and that's what we seem to be seeing here.